Shein is about to go public in Hong Kong at up to $40 billion, less than half what it was worth just 4 years ago. Bottom of the target IPO valuation range, $30 billion. That number speaks for itself. Shein's peak private valuation stands at $98.2 billion. That's the number that really gets me, because it shows just how far the company has fallen in such a short time. I mean, we're talking about a valuation that's more than twice what Shein is expected to be worth when it goes public next month. But here's the thing. Just before this IPO, Shein's private valuation had already taken a hit, down to $64 billion in those later rounds. That's still number, but it shows that investors were starting to get nervous about the company's prospects. Let that sink in. Shein was once worth nearly twice what it's expected to be worth when it goes public next month. Shein's net income, 2024, is a relatively modest $1.1 billion. And that's actually a key part of the problem here. With its projected net income for 2025 expected to be just double that, it's clear that Shein's growth trajectory isn't exactly explosive, which makes its valuation woes even more puzzling. Shein's projected net income for 2025 is $2 billion. And let me tell you, that's not bad, but it's also not exactly explosive growth when you consider where this company was just a few years ago. I mean, Shein's peak private valuation was nearly twice its current expected IPO value. So what gives? It's clear that investors are having second thoughts about the company's long-term prospects. Now we see why Shein's price-to-sales multiple at the top of the IPO range is a paltry 1.0x, which is significantly lower than its peers in the industry. Compare that to Inditex and fast retailing, Zara, and Uniqlo's parent companies, with multiples of 4.6x and 7.6x respectively. It makes you think twice about Shein's valuation woes. You know how Shein's IPO was all about valuations and market expectations? Well, I've been thinking a lot about my own financial expectations lately, and that's why I'm excited to share with you Orniculum, an online learning platform that actually pays you to learn new skills. It's like getting reimbursed for your education, but instead of loans or grants, it's through ad revenue and sponsorships. Courses are free to start, with a paid option if you want to skip the ads. I'm really curious about this one, so check out Orniculum.com and join the waitlist. Link is in the description below. That Inditex price-to-sales multiple of 4.6x is actually a pretty standard number in the industry. But what's striking is that it's still significantly higher than Shein's proposed IPO valuation. Meanwhile, Shein's own price-to-sales multiple at the top of the range is a mere 1.0x. And let that sink in. If investors are valuing Zara's parent company nearly 5 times as much as they're valuing Shein itself, it's clear there's some serious skepticism about this IPO. Now we see why Shein's price-to-sales multiple at the top of the IPO range is a paltry 1.0x, which is significantly lower than its peers in the industry. But here's what really gets me. Fast retailing, Uniqlo's parent company, has 7.6x price-to-sales multiple. That's more than 7 times Shein's proposed IPO valuation, and it makes you wonder if investors are just not buying Shein's growth story at all. Now let's take a look at how Shein's valuation has been trending over time. As we can see on this chart, it's taken quite a hit since its peak private valuation. The overall shape here is one of steady decline, with a sharp drop-off in recent months. It's clear that investors have lost confidence in the company's long-term prospects, and that's reflected in its plummeting valuation. Now let's take a closer look at Shein's price-to-sales multiple compared to some of its fashion rivals. As we can see on this chart, the overall shape is one of steady decline. It's like a slow-moving slide downwards. What's striking here is just how far behind Shein lags in terms of valuation multiples, with Inditex and fast retailing sitting comfortably above it. Shein's peak private valuation was $98.2 billion, but that number has been steadily declining. And now we're looking at an IPO valuation range that's significantly lower than even its own projected net income growth. The numbers are telling us one thing. Investors just aren't buying into Shein's growth story as much as they should be. and the top of that target IPO valuation range, a mere $40 billion, a number that, in hindsight, is actually quite surprising given the company's massive private valuation peak. Let that sink in. Shein's peak private valuation was $98.2 billion, but now it's looking at an IPO range that's lower than its own projected net income growth. The numbers are telling us one thing. Investors just aren't buying into Shein's growth story as much as they should be. It's a stark reminder of the power of market sentiment and the importance of fundamentals in driving valuation. Now we're getting to the math that really matters. The numbers that show just how far Shein's valuation has fallen. That's the math nobody shows you. The top of its target IPO range is a mere $40 billion, which is, okay, this one actually surprised me.